With us this morning is Dino Kos. He's the managing director at Portales Partners, and of course Adam and John here with us as well. And Dino, you and I have been talking quite a bit about the banks and the regulations and all of this, and now we've got this whole factor, this new factor about the world markets and what's going on around there. Are you surprised that we're at this point right now, this early in the year?
Well, we've had a shift between 2009 and 2010. So 2009, you had the response to the crisis. You had a lot of stimulus through monetary policy, through fiscal policy, regulatory measures, lots of stuff intended to reliquify and recapitalize the system. Now what you've had in 2010, just in the first few weeks of the year, you've had China, as we just heard, tightening credit. You had the Bank of England saying, well, maybe we're not going to expand our quantitative easing program. You've got the Fed, who's slated to finish up with their MBS purchases. You heard today that Germany, of course, now it looks like they're back, if not in recession, at least flat growth. And I think the major issue with the whole Greek issue in Europe is that what it's really pointing to is tighter fiscal policy. And so they're going to be squeezing fiscal policy, which is bad for growth. So you've had this shift, again, from 2009, where there was lots of stimulus in the pipeline.
Expansion.
Very good for
now
markets, very good for assets. And now you've got some of this thing playing out.
Which all adds up to what?
Well, it adds up to two things, right? Prospectively, markets are forward-looking, and so it looks like less growth than what they had factored in, but also it does point to volatility, which is the word you used, and you can see it. The VIX is now higher, volatility in currencies is higher, you're seeing the euro come down, so there's lots of churning as the market tries to find some kind of an equilibrium.
Dino, how do you position your portfolio then? What are you guys doing?
After what I just heard, I think I need a cup of coffee.
Well, we have to understand that, the markets are going to go through phases, and there will be waves. So you had this wave again of expansion during 2009, and now some of that policy stimulus is being taken back.
So it's a period of adjustment, in other words. We need to get accustomed to the fact this is what's happening.
It is a period of adjustment, and also to some degree, I think we need to recognize that growth, will probably, not be as strong as what the bulls had been hoping for. And so, I've kind of been in the camp expecting a slow, sluggish recovery, and when you have stocks moving up 70% over the course of 8-9 months, so that's really pointing towards a more aggressive.
So you take money off the table then?
I think probably it's not a bad idea to take some profits. You've had some profits, take some off the table. Be a little more defensive, perhaps. On the other hand, you asked me what are we telling our clients? We do financial services at Portales, and most of what we have a number of institutions that we like. We think that there are some tailwinds for some of the larger banks and some of the regional banks. So we do like some of those still. Again, even though there will be some near-term headwinds even for those.
Okay.